Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in. Take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities. I share those opportunities with everyone in the community through midweek updates and Q&A sessions on the weekend. And you can ask me whatever you like. You can ask me very difficult questions, whatever it is, and I'll give it a shot or at least give you my honest opinion about it. Those are on Saturday and Sunday. Special is a coupon code. If you'd like to try it out, you get 50% off the first month on the monthly membership and a larger discount, which is a $100 discount on the yearly membership. So starting off with the Kobayashi letter, breaking: the Federal Reserve has officially cut interest rates by 25 basis points in their first rate cut of 2025. This ends the Fed's 5 straight meeting streak without any change in Fed policy. So what we're going to watch for is a weaker dollar. Weaker dollar, and if the long end of the curve goes up or down. Why? Why is that important? Well, they're trying to cut rates. I think they're cutting them because they see weakness in unemployment numbers or job numbers. We had those job revisions. I don't know if that was just a cover for Powell to lower interest rates that the Senate and Trump want. I don't know. But if they cut rates and the long end of the curve goes up, it means the market doesn't like it. It means that the market is pricing in more inflation. And what are we positioned for? For the most part, we are positioned for a weaker dollar and more inflation. The very thing that I think this will potentially start. So that's what we're looking for. We're looking for what the long end of the curve is going to do, the 10 and the 30 specifically. And then we're going to look to see if the dollar gets weaker. If the dollar doesn't get weaker and if rates don't fall, well, then we know we've got the market, the bond market thinks that inflation's coming and it's bad. But we're positioned for both of those outcomes. We're positioned for an inflationary outcome, and we're positioned for the dollar to drop if they were to weaken the dollar. Dow gold equals 1. Silver to gold ratio quarterly just now curling up off of an 85 year support level as it builds out a bull flag in preparation for the next leg higher in the metals. There's the ratio. We've got triple digit silver that he's got if the ratio were to extend into that circle zone. And right now, everything looks bullish, even though we are in the pattern. Now, a lot of people will say, well, we haven't broken out of this pattern yet. Guys, understand market conditions. Understand leading indicators. Understand what humans are being subjected to, and the patterns follow the market conditions. This is an early stage bull flag, and we're at a ratio which is historically incredibly cheap. And this is a false breakout. So what did I do? Did I wait for the pattern to break? No, I went full bore, bought the living crap out of it all through this area over here. Because the price was cheaper. Remember, this is a ratio chart. The price of silver was cheaper in 2018, 2019, 2020, all through here. It was super cheap. And now we're in a bull flag ready to flag higher. So tell me why this isn't going to break out. And I'm not talking about short-term market movements. I'm talking about long-term. Tell me why we're not going to go triple-digit silver in 10 years. I don't care if there's a recession. I don't care if things get volatile in the short term. You can't predict short-term movements very well. No one can. And that's why time in the market, the longer you're in, the more successful the returns are for most people, for all people. And that's why day traders all go broke. The shorter the time frame, the worse the outcome is if you're trying to take advantage of short-term market fluctuations. Freight futures AM update. Dry bulk Capesize is up 2%, Panamax flat, and then the tankers are both flat for VLCC and Suezmax. High heat. Saudi Arabia has been exploring for additional super giant oil fields for over 50 years without success. The most recent Saudi supergiant oil fields to enter production, Manifa and Kharis, began operations in 2009 and 2013, respectively, despite both being discovered in 1957. You know, a lot of people say, oh, well, it's underinvestment. We just haven't been exploring. No. The oil doesn't exist. It's not an exploration deal. We've already looked all over the place. The big fields are easy to find. We are going after smaller and smaller fields. Now, someone will say, oh, well, off of Guyana, that's a big field. Not compared to these things. Not compared to Guar. Guar itself is like, what is it, 4 or 5 million barrels per day? Just that one oil field? Just the one. And we're going after smaller and smaller and less quality stuff. Less energy return on investment stuff called shale oil and Canadian oil sands. And we're drilling in the middle of the ocean, miles underneath the ocean. Does that seem like oil's getting easier to get out of the earth as we continue to push the boundaries of new technologies and new developments? We need that just to stay flat. Andrea Stato says, the credit impulse is turning positive. This is not what you see in a slowdown, folks. So G3 credit impulse versus US ISM, which is a manufacturing, we're turning higher here. Why are we lowering interest rates then if things are turning higher? And this is the tough read. Are they just doing it because interest rates are too high for the debt that we've got, which then the interest payments on the debt are a problem? Is it because of unemployment? I don't know. I don't know the exact reason. But if manufacturing is turning higher and they lower interest rates in the face of that, well, yeah, we're going to get a lot of inflation because we're cutting into a strengthening economy. And when you cut rates, generally you get more bank lending because people will take out more loans, which is inflationary. Coming down, rock bottom entry. Silver hasn't even broken all-time highs, and everyone's calling for a cycle top. Shakeout before the breakout. I don't know what's going to happen in the short term, guys. I'll be 100% honest. And you know what? I really don't care. I really don't care. Why? Because I purchased silver for the long term. And I read all these posts about, oh, the relative strength indicator. It's breaking out. Or it's real high and we're gonna get a crash back. And I look at it like, okay, if it does that, who cares? I mean, I'm in silver. I've been in silver, and I'm going to ride it all the way up for the entire bull market. Are we going to get some pullbacks along the way? Yeah. Do I think that these people can accurately and correctly call the pullbacks? No, I don't think they can. I don't care how good they are. Doesn't matter. It's not worth losing the position. And you're going to hear me say that a lot during these updates. It's not worth losing the position. Inflation-adjusted gold is now at all-time highs. Bears will say double top. But I find the cup and handle much more compelling. Do you know why these people are wrong if they're calling for a top? Because they don't know what moves gold, in my opinion. And in my opinion, I think what moves gold is interest rates, for the most part. Now, there are certain market conditions that also move gold. It is a safe haven asset. So when we lower interest rates, at least historically, people view when they lower interest rates to be a problem recession type area because they usually don't lower rates for the heck of it. They lower it because unemployment is going up. But here, this just broke out, guys. What am I going to do with this? I'm going to do absolutely nothing. And that's gold divided by the consumer price index here. We have a long way to go. And I don't really care about the short-term pullbacks. We'll get that. Fine. What bothers me is that people are so easily and willingly getting rid of positions at the beginning of what I think will be the largest bull market in history, or close to it, for gold and silver and for oil, for commodities in general. And the main driver is the debt that America has, which is going to be inflationary. That's the main driver. So did all of a sudden their debt have a solution? No. Then why the heck are we getting out of it? If that's what I think the main problem is. We have a lot of shortages coming up. When I do research of the fundamentals of all these different sectors, there are a lot of sectors where I look out and I'm like, how the heck are they going to meet this demand? Supply is nowhere near it when I look like 10 years out. And it's going to hit here very soon, within the next few years. And remember, markets are forward looking by like 18 months. So this could hit at any second here. And if you get a double whammy is you get all this money printing because they can't shut off, they can't stop this train with the debt. And then you get supply shortages. Oh my God. Do you know what recipe that is? I mean, that's a recipe to send to moon of whatever you're looking at. And all you need to be successful in that type of environment is to have some money and some allocation to that sector that has that. And if there's like 7 different sectors that have that, I would have allocations to every of those, each of those sectors, all 7. Because you can't really predict just how ridiculous it could get in one of the sectors. Now, a lot of people say uranium's got that, and it's like, yep, uranium does. So does other sectors like copper. So does other ones. So I'm not all in on one. Bald Guy Money says, a lot of gold and silver stackers are completely missing out on mining stocks because of the great taking. The great taking that everybody believes will 100% occur. Now, you don't have to put all your money in physical metals, because if the great taking occurs and you have a good chunk of money in physical metals, you'll be just fine. You'll still make a buttload of money. Oh, but what about the stuff that they could potentially take? Well, what if they don't do it? What if they don't take it? And what if some of these mining stocks do, 50, 100 times your money? So you have to balance between what you know and what could potentially come in the future, but you don't go all in on one thing. If all you need is a 5% allocation to a sector, well, maybe that's what we should put, or what I should put. If gold's M2 money ratio, gold to M2 ratio saw its 1980 level, gold would triple from here, assuming the money supply stays flat. It should be a triple. So 3 times, 10, 12,000, something like that. If we see that same ratio. Breakwave, among the biggest drivers of our continued optimism on the dry bulk sector is the new iron ore capacity coming on stream. In the front seat, we have the Simandou project in Guyana, or Guinea, I should say, which is set to start production in November. We're a mere 2 months ahead. We've got absolute massive drawdowns. Crude oil drawdown of 9.3 million barrels. Cushing is down 0.3, gasoline's down 2.4. Distillates are up a little bit, 4 million barrels. On a whole, it was a big draw. Now, are these projects coming online going to reverse this? I don't know. That's a pretty big draw there. I mean, you're looking at what, like 7 million barrels at least, 7.5. That's pretty big. Rick Rule says, I would suggest that we will in the next 10 years experience a commodities bull market that will likely take investors' heads off. I mean, a really, really, really explosive commodities bull market around supply shortages as a consequence of 3 decades of underinvestment. Yeah, that's what I'm talking about in the future. I look at all these different materials and I'm like, where's this stuff going to come from? And yeah, it's going to be absolutely massive. And if you pair that with the money that they have to print to keep this currency system alive, I just look at it like, dude, this is a huge setup. I mean, I don't know. I don't think we've ever seen a setup this good in history, ever. And the dollar is really what's going to drive it. It's a weak dollar. Now trying to get above historical blue line resistance of the big cup and handle. Do you know why this is breaking out and we've got this big cup and handle? Because of the situation we've got going on over here and the debt problem. This is what created the big cup and handle. And that's all I've got for today. So we're going to end it there. That's all I've got. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Specialist coupon code. And that's all I've got. So we'll catch you guys next time. See ya.